Hello and welcome to Innovation with Leadership series by ETBFSI. In this series, we bring the top voices of the industry who are using the new tools and innovation to transform the lending landscape. Well, in today's episode, we are joined by Mr. Raja Debnath, Chairman and Founder at Veefin, to talk about the supply chain financing, MSME credit gap, and how banks can use this tool to transform the lending landscape. Hello, sir, and welcome to the show. First of all, thank you so much for giving your valuable time and talking to us. So let's begin the conversation with some basics since you are into supply chain financing. So in a layman language for our viewers, could you explain it what is supply chain financing, how it is transforming the a financial ecosystem, and how you as a Veefin came into the picture?
Interesting. In simple, I'll make example के साथ समझाता हूँ. So let's think of a large corporate. Large corporate buys from its suppliers but wants to delay its payment or takes time. Say it will pay after 60 days. Now for that 60 days, the supplier is out of money, has delivered its goods. So the supplier can take this invoice, some lender will go and finance that. That's called supplier finance. So you have a supplier side. Now imagine on the dealer side, a dealer wants to buy something from the corporate and the dealer will sell that good after say 90 days. For this 90 days, money will be stuck. So dealer requests financing. So that's called dealer finance. So these are two structures, supplier financing, dealer financing. Now there are multiple structures now within this. Okay, that kaun loan lega, who will repay, all of that. These are various forms. So supply chain is as simple as this: financing the supplier, financing the dealer. That's what supply chain is. And this is actually the safest form of SME financing. To answer your next question, how did Veefin get into it? So I used to be at IFC and I used to help banks across Asia, parts of Africa and including China, doing more of SME banking. So when I used to advise them, I said that supply chain finance is the safest form. As I rightly said, supply chain is the safest form to SME banking. So there I figured out that the number of tech vendors globally, I could count on one hand. So because we could not get tech vendors and the tech vendors were very, very expensive, plus broken processes, underwriting was not there. Either some tech vendor was good on payables, some were good on receivables. So that's the reason I said that post my IFC days, that is the problem that I will solve in the SME space. So that's how I got out of IFC and started Veefin.
So you say you just mentioned it is one of the safe form, the supply chain financing, and I think it's in the picture since a very considerable long time. But if you see on the other hand that MSMEs are facing a huge credit gap and everyone is talking about the credit gap in MSMEs, be it the NBFCs, be it the PSU and private banks, and even the fintechs are coming into the picture. A lot of players into the space for MSME financing, still the credit gap is there, and you would mention that supply chain financing is the easiest form. So why it is still underutilized and not trying to fill that gap?
Point one, supply chain is the safest form, though may not be the easiest. And there are two questions in that. So the credit gap question I'll take later. But the first is, if supply chain finance, which has been there in India since many years now, I think it's been more than 2 decades that it's been there in India, why it has still not picked up? I think the reason for that is most bankers find supply chain complex. Because unlike all other loans, so everything is a loan, there's a collateral, there's one obligor, but supply chain is different. If you have not done supply chain in your life, you will find it complex and you will not go towards it. So the challenge that the banking industry has in the country right now is we do not have too many players who understand supply chain financing. Take any bank. You may be a corporate banker, you may be a SME banker throughout your life, but if you have not sold supply chain financing or not been exposed to it, you don't understand it. And it seems too complex. So if it seems too complex, what do? You do things which you have been doing forever, and the easiest thing. The easiest thing is going and giving a loan to a large corporate. The easiest thing is going and doing SME financing, which is backed by some collateral, always. Easiest thing is to give a loan and not give a specific working capital facility. But the market is changing. What we are seeing is the top banks in the country, they have a stated goal. The stated goal is that over the next 5 years, I should not say 5 years, I should say now over 3 years, because these are conversations which have been going in the industry since the last 2 years, that the banking sector in the top banks will move completely to either a supply chain or a trade finance structure when it comes to working capital. So you pick up any balance sheet or any annual report of the largest banks, you will see bank is growing at say 15, 16, 17%. The supply chain finance portfolios will be growing at 70, 80, 90% year on year. And this has been true for the last 3-4 years. So we are seeing a shift in the market, but the first reason is it's very complex. The second reason is the technology which you require for supply chain is different from the tech that you require for all other products. So you could run any loan product. You're running a project financing, you're running a business loan, you're running a collateral-based loan. For all of that, either your core banking or your LMS suffice. Supply chain require a different setup. So that's the first thing, that I need to do some investment. Okay. The second thing is that the margins in supply chain financing in the initial are lower. So on a like-to-like loan-to-loan basis, if you see, supply chain finance will make lesser money than a usual unsecured or a secured loan to SME. However, if you now look at the longer term, the money that you make in supply chain finance is more. But because bankers don't understand that, they don't get into it. And I have met so many bankers who say, because I don't understand supply chain financing, I don't get into it. So that is the challenge that we have. So, and the second part to your question, credit gap. As a part of IFC, I have headed numerous such studies. So one thing that I figured out is you have to unpack the MSME credit gap. So in India, the MSME credit gap across various reports says it is between 20 to 30 lakh crore. And that's the number, and everybody talks of that. But if you see, where is that gap coming from? That gap is actually in the informal segment. If you now look at the small and medium enterprises that we are talking about, there is no gap out there. The gap is just not there. What you have is not a credit gap. There it's something what you will call a cost gap. So what does cost gap mean? It means that the SME requires financing at a particular rate. They don't have a lender to give it at that rate. Because everybody, if you go to any SME, they say, I want it at the lowest rate. But every SME carries a certain risk. The job of the lender is to price that risk into their product. So today there is no SME, I would think, in the market, at least the urban tier 1, tier 2 cities, where they will not find a lender to lend to them at some price point. But they want it at a different price point. So therefore, there's a cost gap out there. But there is no challenge. So where does supply chain come in this? Now supply chain is a form where I said that the cost is lower. So for these SMEs, when they want a lower priced product, it makes more sense to give them a supply chain product, because from the bank's point of view, risk is lower. They will make more money over the longer term. The SMEs will love it because the rate is going to be lower than the rate that they pay today for the collateralized or the uncollateralized loan. That's the long and short of it.
So you just highlighted that there is some kind of not exactly lack of knowledge, but still some more information needs to be provided to the banks in terms of supply chain finance to bring it into a proper track. But at the same time, what suggestions do you have for the banks specifically if they want to bring into the picture the SCF, and at the same time there is a need for the collaboration with the fintech or tech companies, or they should take the stand-up alone approach for this particular segment?
Multiple questions into one. So let's look at this, Vikas. What should the banks do? I think the amount of literature that we are seeing in supply chain financing, that is growing over the last few years. Because go back to pre-COVID times. And let's look at India. Pre-COVID times, the number of players in India who were into supply chain financing were again limited. But COVID brought about the word supply chain. So everybody now knows of supply chain during COVID. So post-COVID, we have seen numerous lenders getting into supply chain financing. So that's a positive. So the market is moving towards supply chain financing. Market understands supply chain financing more, and because as Veefin, anybody in India, if they want to do supply chain financing, they reach out to us. So we are seeing a huge incoming demand of new lenders coming in and saying, we want to do supply chain financing. But the incumbent banks which are still there, they have not, how do I say, not woken up to the entire size of the opportunity. Because right now, the size of the opportunity that we have right now, I would say is only 10% of the market that we have captured in supply chain financing. So we'll see a big change in that. There's some good, the government has been pushing a lot. So government has worked on TREDS. So TRED, which came out in 2015-16, that's picked up. So you're seeing there's a lot of traction which is happening on TREDS. The Public Sector Bank Alliance, they have come up and they have started this PSB exchange. The Veefin runs the PSB exchange for the public sector banks. And it's open not just for public sector banks, it's open for NBFCs, private banks, MNC banks, all of them. That will again expand the market. So we will keep seeing expansion of the market, and this is just a matter of time. And I'm telling you, 3 years down the line, you will not see any large bank not doing supply chain financing, because there's a lot of pressure that's coming from the top saying, if XYZ bank is growing at this kind of pace, why are you not growing?
We just talked about the MSMEs, and you highlighted that there is not the credit gap, but let's talk about their credit access, right? If an MSME has to access the credit, so do you think that embedded finance is going to transform this lending thing that MSME is facing, or there are standalone entities that needs to come into the picture, or they should rely on standalone entities only?
No, both. I think the India is a very, very large market. India is a very large market. Each lender will have a different risk appetite. Okay, like even though a lender may like you as a SME, they may not be able to take care of your entire credit needs. So you have different lenders who will have different hierarchies of risk, who will come in at different price points. So that is very critical. So we have lenders. The market is large enough for large banks, the small finance banks, the NBFCs, the fintechs. Everybody has a role to play. And the way the credit industry works is, SMEs who large banks don't cater to, they will first be catered to by the fintechs and the NBFCs. They will bring them in, they will season them, and it's like a hierarchy in which once they've got seasoned for a couple of rounds out there, then the small finance and the private banks will pick them up, and then you have the PSU banks. So that is the structure. So that is the reason why in the SME space, if you see, you will always have the NBFCs and fintechs as the starting point, but the customers, once they become of a different size, they will then graduate and go to the larger banks, because their ticket size is going to be higher, the interest rate expectations will become lower, which the fintechs and NBFCs can't provide. So it's a gradual treadmill in that sense.
So now let's come to the lender's perspective, like specifically for the small NBFCs, cooperative bank, and maybe small finance banks. So do you see that low code, no code is going to transform the digital lending infrastructure for these entities, and what technical aspect do you foresee that is going to transform this particular lenders?
It's low code, no code is a very, very important topic in the industry right now. And what it basically does for our viewers, in a no code platform, I'll say low code and no code are two different things. Like one of my friends says that there is either you are either a smoker or not a smoker. Okay, so either you are no code or you are coding. So in a no code platform, there is no ability of doing any kind of coding in the front end. So what happens is, people with zero coding knowledge, okay, like you and me, I don't have coding knowledge. Zero coding knowledge will be able to drag and drop and using plain English create their workflows. So in the lending space, for small NBFCs, banks, and even large banks, it makes sense to have a no-code platform using which they can orchestrate their processes, their products themselves, and not rely on vendors. Okay, that's a huge thing with no code. And with smaller NBFCs, with smaller fintechs who are more nimble, having this should be very, very beneficial. Just yesterday, we have, we'll be announcing it soon, with one of our credit bureaus, we have come into a partnership wherein for a certain segment of the NBFCs, which numbers around 2,800, we'll be giving them no-code platform-based underwriting journeys out of the box. Now, the speed that they get for launching their product, the speed that they get to run a champion challenger is unparalleled.
So now I'm giving you three aspects, which is credit, second is operational, and third is reputational. So what do you foresee the digital supply chain financing are going to face the challenges out of these three of them, any one of them, and what is going to be the ranking that you're going to give?
I think different segments of the market, unpack it. So you have the large corporate chains. There, the challenge will not be operational. Okay, there's no risk out there when you're working with the largest corporates in the country. Okay, so imagine the top 1,000 corporates. When you're working out there, you don't have a challenge, and we have seen this over time because we have enough data over the last 10-15 years which shows that if you are doing a supplier finance program, you're doing a dealer finance program with the large corporates, your delinquencies are next to nil. So that's a given. Now, when you come down below that, that's where there's a larger opportunity. So, larger opportunity will therefore also mean that there could be risks out there. Now, that's where operational risk will take over. So, you then require robust systems to take care of the operational risk. So, we have seen cases where you are hitting one transaction and multiple disbursements are happening on the same, or you are seeing cases where you want to pay to X person and the payment goes to some Z person, that's not your customer. So those operational challenges are there. So that's the reason having great tech, a well tried and tested tech becomes very important to cater to the operational challenges.
We talked a lot about the challenges, and one final thing that again is on the challenges side, but again I would like to get some safeguards also, if you can suggest. Firstly, do you see any pitfalls in the SCF industry? If any, then what could be the safeguards?
No, there are talks sometimes of double financing of invoices. Double financing of invoices becomes across as the only pitfall in the industry. So for that, the PSB Alliance and Veefin, we have got together and we are launching an invoice bureau. Basically, it's a utility, it's a public good utility which we are launching for the entire industry, so that whenever you are financing an invoice, go hit the bureau and check whether that invoice has been financed by anybody else. So that's the only pitfall, and for that we are coming up with a solution for the entire industry. Other than that, supply chain finance, as I go back to saying, is the safest form of doing SME banking.
Very well noted. Before we wrap up this conversation, one final thing that I would like to understand from you. In fact, this is something that you can give as a message to the new fintech players who are planning to come into the industry, that what value chain they should target, and secondly, for the leaders, fintech leaders who are planning to come into this space, how they should plan to walk the regulatory tightrope and follow the compliances to come into the play.
So the first one, that if somebody is thinking of getting into the value chain or the supply chain industry, I think one of the big bottlenecks, one would say, is the ability of onboarding the SMEs onto the supply chain finance programs. So more and more players, if they can come into that segment, banks will welcome them with open arms. So that's the segment that people should be looking at. Okay. The second, on the tightrope between regulatory, so I would advise fintech leaders getting into this space that when you're reading the regulation, try to understand the spirit behind it and not the what's written, the letter. The spirit is more important. If you're in doubt, go and ask. Don't go ahead and do it, because that's the reason why then RBI comes and makes things tighter. As I always say, policies are usually made for 10% of the people who want to break the policy. So 90% of the people suffer. That's the same thing in the industry. So for 10% of the people, 90% of the people suffer. So my advice will be, everyone, please read the RBI regulations and understand the spirit behind it. If you think that this is too good to be true, yes, it is too good to be true. Do not do that.
Well, thank you so much, sir, for this beautiful message that you just gave for the new players coming into the picture and decoding the SCF aspects in our conversation. Thank you so much.
Thank you, Vikas. Pleasure.